You're watching Personal Finance with Coach Kelvin. Let's get into the video. Hey guys, Coach Kelvin here. Today I'm going to be doing something a little bit different. I'm going to actually be interviewing a friend of mine, Steve, and he's going to tell us a bit about his investing backstory and a bit about his strategy.
Hey guys, I'm Steve. Thanks for having me, Kelvin.
No worries, it's actually really exciting. Right, cheers.
All right, cheers.
All right, so Steve, tell me a bit about your backstory and why did you start investing in the first place?
Well, I guess as a kid, I saw my dad checking his stocks. I don't know if you've heard of it, but like in the UK we have this thing like teletext, and you flip to this screen and it shows all of your stocks. This is before like computers.
So you couldn't just check it on your phone or on the computer?
No, not back in those days.
Awesome, yeah. I can't imagine that.
Yeah, so I grew up seeing my dad check stocks. I never really actually asked him much about it, but he occasionally said that he'd made a bit of money on the stocks.
Yep.
Never huge amounts. So I guess from that point of view, that's I thought as an adult maybe I could make some money as well.
Perfect. When you lived in the UK, did you invest back there, or did that start once you got to Australia?
No, my investing journey didn't really start until I got to Australia, because back in the UK I was pretty poor. Okay. Yep. I had a budget of about £12 a week for food, so
unreal.
I definitely didn't have enough money to invest. I was always doing sort of what do you call them? What do you call it when it's like a job that like just like lackeys do? Like working in a factory or something.
Oh, just like a labourer job, or?
Yeah, like I worked in factories. Like I worked at a laundry factory. Worked at cinema and
so just very much like
supermarket.
Yeah,
just
standard
like,
pack jobs.
Yeah, like pretty low end jobs.
Yeah.
So I didn't have much spare income, and it wasn't till I graduated my apprenticeship and then came to Australia that I actually started to have a bit of spare income, and I decided I'd start investing it.
That's really cool. So you must have developed some pretty frugal habits living like that.
Yeah. So the first year that I came to Australia, I think I had a salary of like $70,000.
Yep.
To me, it was a massive amount coming from the UK. It was like 3 times what I was paid in the UK.
Well, that's fairly average income for Australia.
Yeah,
like it's pretty.
Yeah, it seemed like a lot to me at the time. So
that's amazing. I
decided like I would carry on a similar sort of lifestyle that I already had in the UK, and I managed to save like 2/3 of my salary each month. Yeah. And after about 4 months, I think I had about $20,000 saved up. Which is literally where I started my investment journey. Yeah.
That's amazing.
Yeah.
All right, so what sort of narrative as a kid were you told about money and finances? Did you have any discussions about that with your family, or was it sort of not talked about?
I think it was not really talked about. Like it was, my parents didn't really have a lot of money.
Yeah.
So they tried to sort of shield us from, we heard them arguing a few times about not having money and how we're going to pay the next bills and things. So I think they tried to shield us a little bit from that side of things.
Yeah.
But like, I remember having a savings account with a paying in book.
Yeah.
And I used to be so proud that every Christmas and birthdays, like my nan would give me £20 or something like that, and
you could watch the balance.
Yeah, and I'd watch that little balance go up, and I was so proud of that.
Yeah.
And like my parents sort of encouraged that behaviour. Like they said, "Oh, good job on getting £500."
Yeah.
Like,
so positive reinforcement.
Yeah, positive reinforcement.
Yeah.
So yeah, I guess like even though it wasn't really talked about, it was encouraged, and I saw my parents, just work hard and I guess save. So that behaviour's instilled into me, I guess.
That's great. All right, cool. So what was your first investment? What investment class did you go into, and also how did you sort of finance this investment? I know it's a funny story, so I'm excited for you to share this.
Well, the first investment was pretty chill. Like through Westpac, I did a bit of googling and found that Westpac had an investment app. So just started buying up Westpac shares
Yeah.
and cash converters.
Sort of brands you're familiar with?
Yeah. Cash converters. It's like a thrift shop. What
the reject shop.
Reject shop.
Yeah.
All that sort of stuff. Stuff that I saw being like value stocks.
Yeah.
But after a couple of months of only seeing a couple of percent gains,
Yeah.
I got a bit bored and started looking for bigger gains.
Yeah.
So I decided that I was going to take out a little bit of leverage in a credit card, and I found I sort of used Morningstar stock screener and found a graphite company that had just defined their maiden resource, and it looked pretty promising.
Yeah.
So I stuck $75,000 in there, so $50,000 in credit card debt.
Wow.
Which I was amazed to get.
Yeah.
And my 20,000 from the other stocks, and maybe 25,000 or whatever it was.
Yeah.
And that was my big gamble at the beginning.
What gave you such high conviction about that company? Did it have really solid cash? Was it good fundamentals? Did you understand the research you were doing, or was it a little bit of a punt?
I think it was a bit of both. Like, I bought a book called Bulls, Bears and a Croupier.
Yeah.
And absolutely loved that book because the main character in it is basically like me. He's sort of risked everything to make it big.
Yeah.
And I sort of saw a bit of myself in that. I've been to casinos and gambled a bit, and always wanted to make it big.
Yeah.
But I also read the series parts of the book. How to value a company and all that sort of stuff. And based on what I'd read in the book, I thought this company was the bee's knees.
Yeah.
So I was so high conviction on it, and it turned out to be actually right.
Okay, very cool. Did you, upon doing your research, did you have someone sort of fact check or try and disprove your hypothesis?
Not back in those days. I used a few stock forums and chatted to a few people on there, and I came across one guy who was very smart. I still talk to him now and take a few stock tips off him and give him a few stock tips.
Yeah, perfect.
And he seemed to, again, be very high conviction, but he'd done a lot of numbers.
Yeah.
And he shared his numbers with me and a few other people on the stock forums, which gave us even more confidence.
Yeah.
Yeah.
Awesome. So then after that, it was just guns blazing. You put the 75,000
Yeah.
in, and tell us what happened. Were you struggling to sleep knowing you had that much credit card debt, or?
Not really. No.
Okay.
That sort of stuff didn't really catch up to me until quite a bit later.
Yep.
So, right off the bat, the stock started going. I think it was about 6 cents when I got in, and it just kept going up and up and up and up over the next 6 to 12 months.
Yeah.
I think it reached maybe 60 or 80 cents. And
So like 12x basically.
yeah.
Wow.
So I can't remember how much I had at the time, but I got a bit cocky.
Yeah. Okay.
I took some out, got a bit cocky, but I didn't take all of it out. And when you get parabolic trends sometimes, there's obviously a downside to those.
Correct.
And that happened. So they went back to, I think, about 30 cents, and then just slowly they went quickly down to 30 cents, but then sort of slowly from there back down to like 10 or 11, 12 cents. They hovered around that for a couple of years, and they may have peaked at about 30 cents, but I was always waiting for them to reach new highs again.
Yeah. And those new highs never really came?
They didn't really come until about 2 years ago.
Okay. Had you already exited your position then?
No, I had exited probably about half of the position.
Yeah.
So I think. By the way, I was one of the top 20 shareholders at that time.
Wow.
I'd had calls from the the managing director, and he invited me out for lunch and crazy things.
Wow,
like that.
that is phenomenal. Unreal.
Talked to him on the phone quite regularly.
Yeah.
And I think I had about just over 500,000 shares at that time.
Yeah.
But then they went through a few cap raises, and I got diluted down, and I ended up selling part of my position. I converted my initial credit card debt into a personal loan.
Perfect. So that became a bit more manageable
because the payments were getting a bit out of hand.
Oh, of course. Yep.
And yeah, I think by the time I actually sold, I had about 350,000 shares left.
Yep.
So it's still a sizable chunk, and I managed to sell close to the recent top, which is about 90 to 98 cents, 92 and 98 cents, I think, was the two parcels that I sold.
That is unreal. So 6 cents to 98 cents. Wow.
But in the meantime, it had actually dipped down to 3 cents, like during those highs and lows, and I was pretty scared at that time.
Yeah, I can imagine.
Yeah.
All right. So in that case, when it comes to investing, do you have a preference for property, crypto, or shares?
I'd say I've got a preference for shares. You know, I'm not too keen on properties because you've got all the management fees and repairs and all that sort of stuff.
Yep.
Maybe I just don't understand it enough.
From my own experience, like property comes with a lot of heartbreak. If you can't get a tenant, you've got an expensive repair bill. It eats up your returns. There's nothing quite like just waking up richer like you do with shares, is there? It's addictive.
Well, shares go both ways. So,
for sure.
With crypto, like I've played around with a bit of crypto. I actually made quite a bit. I bought I bought them at $1,000 each, and I sold them at $3,000 each.
Yeah.
If I'd have still held them today,
oh wow, yeah, you'd be in a great position.
I'd be pretty happy about that. But I mean, I made 3 times on my Bitcoin, so
yeah, phenomenal.
But to be honest, I don't fully understand like the dynamics and economics and macros and things behind what drives the price of crypto.
Yeah.
You know, and recently I guess I've just come to the conclusion, if you don't understand it, don't invest in it. So
it definitely helps to believe in what you're investing in because it's not going to cause liquidation, etc. So I can totally agree with that.
So I guess with shares, I find them a lot easier to value. You can go and find the annual reports or quarterly reports for small cap miners and things like that. There's a lot of stuff in there. You read through them. So I feel like it's quite easy to sort of put a value on these things, and you can also see what the resource in the ground is, I guess.
And I guess in your case you can also have a conversation with the CEO, right?
Yeah, there is that as well.
That's really cool. So you get the chance to actually not only value but also confirm what it is you're thinking. So very cool. All right. In your investment career, what has been your worst investment that you've made?
There's 2 equally worst investments actually. One was a company called Medivac, and they were like I thought they were a pretty decent business model. They were creating machines that basically mash up and sanitize medical waste.
Okay.
They also had a line of medical grade surface wipes and hand wipes.
Yeah.
And I thought, sounds like a pretty decent business.
And I guess diversified in product and service.
But unfortunately, they went into administration, and I lost $20,000 on that.
Oh no, that's a shame.
Yeah. And then the other one was a company called Sky and Space Global. Yeah. It's similar to what Elon Musk's doing at the moment with his
the Skynet. Is
no,
that what
it's
called?
not.
No, it's not. That's our Terminator.
Skynet's from Terminator. What is it actually called? Starlink.
Starlink, that's it.
So it's similar to what Elon Musk's doing with Starlink. They were like a budget version of that. They were gonna send up some satellites. They actually sent up 3.
Yeah.
And tested the technology. You could open an app and track where they were.
Yeah.
And they were gonna basically provide cheap internet in places very rural places that didn't have internet and phone access. It sounded like a good business model.
Yeah, and definitely high in demand worldwide, you'd assume.
Yes.
So what happened with that company?
They all also went into administration.
Oh, okay.
And I lost about $20,000 on that. They've actually gone unlisted, and I have now 3 shares in them, which is probably worth about $7 or something like that.
Yeah.
It's ridiculous.
But
I've basically lost the entirety of my money.
But the company essentially still exists.
The company still exists, and the directors are still in place, but they're not
making moves.
No, they went through the administration process and stripped a lot of their assets and things. Yeah.
Yeah, cool. So, in that case, what was your best investment? Was it the graphite mine?
That was one of my best ones, but I'd have to say that Alligator Energy, which is a uranium explorer, sort of hoping to turn miner, I guess.
Yeah.
They were my best investment. That was just recently, last year.
Yeah. Would you like to tell us about your way that you researched, you became high conviction in that investment, and perhaps your entry and exit?
So this is kind of a funny one, because the fellow that I was talking about, who I talked with the graphite stuff about, he dropped a little breadcrumb on the forums.
Okay.
And I decided to go and look it up.
Yeah.
And I found the company, did a bit of reading about them, and I thought, I know this guy, knows his stuff, and he wouldn't be so, he's pretty high conviction on it. Because I sent him a few private messages, and he seemed pretty high conviction on it. He'd gone big.
Okay. So prior to him putting it on your radar, you hadn't seen anything about this?
Didn't know a thing about it.
Okay. Yeah. Cool. All right.
Basically, I trusted the person that gave me the tip.
And then your own research.
And then I did a lot of in-depth research. I actually called the CEO before I put any money in again.
Wonderful.
I ended up taking a very large position, 6 million shares. I think it was about $100,000 into this one.
And what was the percentage ownership of the company again?
Only 0.25% of the company on this one. Yeah. But the best part of it was they went from my entry price of 1.5 cents all the way up to I think 5.9 that I sold out within a year, 12 months. They're actually at 10 cents now.
Yeah.
But I don't regret my exit from them, because I made plenty on there.
Yeah, and you also mentioned about a few trades you made along the way where you were able to capture some pretty good gains in a very short amount of time.
So I had my main holding, which was 6 million shares, and then I had a trading parcel as well, which is a couple of 100,000 shares. Yep. I trade in and out, and then by the end of it, I was 42% free carried.
Wow.
So I basically released 42% of my original capital.
Yeah.
From the 6 million shares.
Yeah, cool. So you initially invested in at 1.5 cents. You walked away with essentially 5.9 cents. Average sell.
I think the final figure was $450,000
on the last sale you made.
Yes.
Wow.
Yes.
Plus the capital you returned before that.
Yeah. Plus a few sneaky trades.
Yeah.
There's maybe 10,000 or so. Few trades in between. Yeah.
Yeah, that is a phenomenal result. So you waited the 12 months to collect the capital gains discount of 50%. So
that was the reason for waiting the 12 months to get the 50% discount on the capital gains.
Yeah, and that obviously is a really strong investment strategy because your tax liability is less. When you are talking about your investment strategy, obviously capital gains are very tax efficient, but have you thought about any perhaps income shares, so like looking into ETFs, passive income, that sort of thing, or is that not quite on your radar yet?
It's not quite on my radar yet. I like the idea of it, but I have a number in mind for my my FIRE journey.
Yeah.
Are we going to talk about that later on now?
Yes, we are. That's the next question.
Okay.
Yeah, so I was trying to... Yeah. That's okay.
No. So you want to go
Yeah,
now?
so I guess in that case, then what is your FIRE number? What sort of income are you looking to generate off your portfolio every year? And once you reach FIRE or financial independence and early retirement, I guess what is the plan from there?
So my FIRE number is 1.3 million, and that will generate probably about $52,000 a year. And I guess basically, I just don't want to work for someone else.
Absolutely. Upon reaching that FIRE number and generating that income, are you excited that that's going to still generate you more money than sort of what you used to make back in the UK? Like from working full time?
Yeah, I mean, with what I intend to make from FIRE, I guess that that has all my general expenses covered, and it's enough that I still have some play money. I can still do a bit of trading.
Yeah.
And still go camping and fishing, and do all my
still live a great life with hobbies. Yeah.
Do all my little hobbies that I enjoy doing.
Yeah.
So, what was the question?
Yeah. So it was what will you do with your early retirement, essentially?
Yeah, just take it easy. Get into get a bit deeper into some of my hobbies, do a bit more camping, take my dog for a few more walks, that sort of stuff. Yeah.
So yeah, you're very much well on your way to achieve that FIRE number, and your strategy will get you there much quicker than mine. But do you want to maybe talk about some of the risks of, you could call it YOLOing into a stock, but it's not really. You were very well researched, high conviction, and you not only did some reading, but you fact checked. But there is definitely like a YOLO culture when it comes to investing. So perhaps, do you want to discuss some of the risks of that style of investing?
I thought you might bring this up, and I feel a little bit offended that you call it a YOLO.
No, I'm not saying you do, but definitely, like you hear about people in the United States putting everything on AMC, for example.
Yeah. So I did actually join the Wall Street Bets and the ASX Bets subreddits. Yeah. I honestly think I'm different.
Yeah.
To the YOLOers.
Yeah.
I do a lot of research. Like I call the CEOs. I can guarantee none of those guys on those forums have ever spoken to the CEOs of the companies.
Yeah.
I spend a lot of hours reading. Set up Google alerts for all of my stocks.
Yeah.
There are big risks, but there's also big rewards.
Sure.
But usually with the sort of stocks that I'm going into, I've weighed up the positives and the negatives. I look for things that are generally sort of within 30 million market cap.
Yeah.
30 million to 100 million market cap. I look at whether they've defined the resource, because I'm generally into specky miners. Penny miners.
But something with solid fundamentals.
Yeah, so I'm looking for what's the next catalyst.
Yeah.
What is going to make this stock go up? I'm not just finding a random meme stock on the internet and just going all in.
Yeah.
I'm looking for a catalyst. There has to be something that's going to drive the price up. So I have a look, see what they've got, whether they've defined the resource or whether they're just about to define a resource.
Yeah.
Whether they're doing a capital raise, all that sort of stuff. So I know what the risks are. If they need money, then there's probably going to be a cap raise, and it's probably going to be at a discount. And some of them are heavy discounts on the little miners.
We experienced that with our Alligator Energy, actually.
Yes. And I went through plenty of cap raises with EGR as well.
Okay, yeah.
I actually got invited to invest in some of them, and I took up either one or two of them.
Wow, that's really cool.
Yeah.
So you're always looking for, I guess, a penny stock miner that has a competitive advantage, solid fundamentals, and a generally parabolic trajectory.
No,
if possible.
No, I don't like parabolic trajectories. That actually puts me off.
Okay.
Because when you get that very rapid growth, a lot of people sort of jump on as it goes up, and then once they reach their profit point, they exit, and it drives the price down pretty quick. I like sort of a 45-degree angle chart, and
Yeah.
that's literally what I'll look
Yeah,
for.
cool.
You know, something that's going up nice and steady. If it's a little bit steeper than that or a little shallower than that, you know, I'm happy. But I generally don't like parabolic trends.
Yeah, especially when it's so difficult to enter and exit the position at the right time.
Yeah. So a lot of the stocks I go into, the quite small market caps, and if I'm taking a big position, it's quite hard to enter and exit. So I need something that's going to be quite steady.
So that at least if you wait the 12 months, you're still likely to be in the money.
Yeah.
Yeah.
And a lot of these stocks are quite illiquid sometimes as well. So you know, there isn't the trading volume for me to get in and out quickly.
Yeah. I can
if something's
see that.
going up quickly and down quickly, you know, you got to be able to have that room to move.
Yeah.
Yeah.
All right, cool. Now, coming towards the end of this sort of chat we're having, do you have one piece of advice for new investors, especially, I guess, people that are nervous about making that first buy?
Yes. So I say, you know, it's okay to start small. If you start with something like Raise, and just start, you know, doing your dollar cost averaging and build up your portfolio. Slowly, it's okay to start slow. You know, I also say don't invest in anything you don't understand.
Yeah, absolutely. So always stay in your circle of competence.
Yeah. So if you've got a knowledge area that you're interested in, you can always make that into an avenue for researching investments.
A lot of companies in Australia sort of allow employee bonus shares in their company they work for, so that would be like a good example of the circle of competence, I guess. And that's often people's first position. So yeah. All right, very cool. Thanks for coming on today. I really enjoyed having this chat, and your investment strategy not only scares but also excites me. So it'll be really interesting to see what happens with this next move that you've made. We won't talk about it today, but perhaps once that position is closed in the future, we'll see.
Yeah, I'm sure we'll be talking about it soon.
All right, thanks for coming on, and I appreciate your time.
All right, cheers.
If you guys got any value from this style of video, and if you liked having a sort of interview about another person's investment strategy, please like, share, and subscribe. And I look forward to seeing you guys in the next video. And do you have anything else to say, Steve?
No.
All right, awesome. Thank you.